Josh Hones with RobinCoins.com, helping you to steal from the rich and give to the poor. Data runs financial markets, and professional traders rely on computer terminals to look up the price of bonds, stocks, and currencies. While Wall Street is dominated by incumbents like Bloomberg and Thomson Reuters, the cryptocurrency space is still searching for its stalwart. Cryptocurrencies such as Bitcoin and Ethereum, there's no single comprehensive destination for traders to dig into deep pools of data. While most technology firms are too slow and cautious to keep up with the cryptocurrency world, Morgan Downey of Money.net thinks his website can keep up with the frenzy. Downey was previously the head of commodities at Bloomberg and plans to launch an all-encompassing pricing tool for around 550 digital assets as well as initial coin offerings. Litecoin, Ethereum, and Ripple were recently added to Bloomberg's terminal network, and Thomson Reuters provides data on Bitcoin, Ethereum, and Bitcoin Cash through its Icon platform, along with indexes and futures. Cryptomania has swept up just as many 20-year-olds as Wall Street veterans, and one way to cash in on the boom is to develop the digital infrastructure for trading. As institutional investors start making plays in the market, hedge funds and banks need more accurate data and years of historical information to value assets and make bids on offers. Terminals provide one-stop shopping for data and are very lucrative for subscribers as well as providers. Bloomberg has almost 325,000 subscribers. They charge more than $20,000. Part of the reason the data business is so lucrative is because it's prone to monopolies. Traders and analysts build elaborate spreadsheets and other tools based on information feed they get from the terminals. This makes changing terminals difficult and time-consuming. Now, the law of smart contracts might rule differently with blockchain technology. Because smart contracts are tracked and made public using the blockchain, many are worried they may eventually take the place of human attorneys in certain fields. The blockchain is a distributed digital ledger over a network of computers rather than located on a single or even multiple servers. Transactions made using the blockchain technology are recorded chronologically and publicly. It is almost impossible to alter the historical records on a blockchain ledger, and more importantly, access to a blockchain can also be restricted. Ethereum founder and creator Vitalik Buterin states, "All transactions on a blockchain come with auditable trails of cryptographic proofs. Rather than simply hoping that the parties we interact with behave honorably, we are building blockchains that inherently build the properties in the system in such a way that they will keep functioning with the guarantees that we expect, even if many of the actors involved are corrupt." One of blockchain's main features that could affect the commercial and economic ecosystem is its ability to eliminate the necessity to trust an intermediary to certify a transaction. Ethereum is one of the leaders in smart contract technology and adoption. Smart contracts are computer protocols or algorithms which can verify the negotiation process or performance of contracts. This is leading people to speculate that legal relationships may eventually be reduced neatly into coded clauses that are automatically enforced once pre-programmed conditions are satisfied. These coded instructions execute on the occurrence of a certain event. Smart contracts can automatically move digital assets, including contracts, according to arbitrary, pre-specified rules, simply by writing up the logic in a few lines of code, Buterin explains. Attorneys are beginning to realize that smart contract technology is going to be an unstoppable force in their profession. With the inalterability of data mixed with smart contract technology, blockchain technology is aiming to create immutable, time-sensitive, legally defensible records. This would allow both sides of the contract, the offerer and the offeree, to guarantee execution without the necessity of a third party. Blockchain and smart contract technology is beginning to start its real-world application in the legal field. In a recent report, Goldman Sachs strategist stated, "In the recent decades, the US dollar has served its purpose relatively well, but in those countries and corners of the financial system where the traditional services of money are inadequately supplied, Bitcoin may offer viable alternatives." This statement shows progress from the banking industry that has been highly skeptical and combative towards digital currency. Some notable big bank and mainstream investors to discourage cryptocurrencies include JP Morgan CEO Jamie Dimon, who called Bitcoin a fraud last year, and legendary billionaire investor Warren Buffett, who insisted that Bitcoin isn't money and people should stay away. Goldman Sachs' influence cannot be overstated in finance or politics. The relationship between the United States government and Wall Street has been well documented. Many large publications such as Al Jazeera, The Independent, and The Huffington Post have written articles on the revolving door that exists between Goldman Sachs and the United States government. Some notable people who worked for Goldman Sachs, either before or after working in politics, include Henry Paulson, who served as Treasury Secretary under President George Walker Bush. He was the CEO of Goldman Sachs from 1999 to 2006. Robert Rubin served as Treasury Secretary under President Clinton. Now, he was the president of Goldman Sachs from 1990 to 1992. William Dudley, who is currently the president of the Federal Reserve Bank of New York, is the former Chief Economic and Advisory Director at Goldman Sachs, where he worked from 1986 to 2007. Stephen Friedman was chairman of the Federal Reserve Bank of New York until May in 2009, when he was pressured to resign after buying Goldman stock in December and January. Previously, he was director of President George W. Bush's National Economic Council. Friedman joined Goldman Sachs in 1966 and was co-chairman from 1990 to 1994. Robert Zoellick currently serves as the president of the World Bank and previously was Deputy Secretary of State. He was previously a managing director at Goldman Sachs, which he joined in 2006. Arthur Levitt is the longest-serving SEC chairman from 1993 to 2001. He was hired by Goldman in 2009 as an advisor on public policy and other matters.